Can everyone hear me? Oh, I can see everybody. It's making me nervous. All right, so today, here, let me break something down real quick. So, for the most part, the classes should be, I don't know, an hour and a half to two. Today it's gonna be one because I just want to kind of see where everyone's at, and then every every class from today after today will probably be around. It'll be over an hour. Um, because this time around I'm just gonna have people like ask me questions here and there because I didn't really do that before, and I think that'll help. But I just have like a few questions that I want to ask, and I want everyone to kind of answer it using the chat. Okay, so if you don't see the chat, so make sure you find the chat thing. You can literally type in whatever, and you can see what everyone's typing. So I'm gonna share my screen now. We'll just start from the beginning, okay? Don't just answer all of them all at once. So first of all, how old are you guys? And this is gonna kind of tie into like everything else, by the way. Okay, so from I want to say 20 to 30 for the most part. Okay, what device are you guys using to trade with? Are you guys gonna be using your phone? Some people just use their phone, to be honest, and there's nothing really wrong about that, okay? Just so you know. It's just if you're starting, it's gonna be kind of overwhelming. I just want to let you guys know that. It's gonna be really overwhelming to just use your phone. Once you start getting used to the like screens and stuff, that's when you can, kind of move on to the phone. So I suggest, if you do want to take this kind of like seriously, because remember, you're risking your money here at the end of the day, okay? So it's not a bad thing to invest into something that's going to help you, okay? So I suggest if you're brand new, you should use a normal screen, right? If not one, if not two. I used to have three, okay? If you have been trading, how long have you been trading? I want to get an idea. I want to get an idea of how long you guys have been trading so I don't move too slow and I don't move too fast. Okay, so for the most part, everyone's been trading for like at least three months, right? There are some who are brand new. That's good. If you've traded before, what were you trading if not options? A lot of people come from penny stocks, whatever, right? Crypto. And how many? Oh yeah, I didn't write this down. But how many of you actually started trading because of the whole AMC and GameStop? There's nothing to be ashamed of. How did you guys find out about trading? Is what I'm saying. All right. So, what app or brokerages are you guys currently using? So everything that I'm gonna be showing you, okay, I use Thinkorswim by TD Ameritrade. So TD Ameritrade is a brokerage, and Thinkorswim is the platform that is connected to the brokerage. So just because you have a TD Ameritrade account doesn't mean you have a Thinkorswim. It doesn't mean you can just go on Thinkorswim from the website. You have to download it. Okay, so if you don't know how to do that, just look it up on Google and download it. Let me remove this thing so people can draw. So I trade with TD Ameritrade strictly just for day trading, and I use other brokerages for swing trades. I mean, I don't want to confuse you guys from the jump, so we'll get into that later on. But for the most part, I use Thinkorswim. It's user friendly to me because I can access like charts and everything all at once, so it's not confusing. What is your guys' account size? Just a rough estimate. Okay. So I'm seeing a lot of like between 5 to like 25. So if for those of you who have been trading, what do you think your biggest struggle is right now? What are you guys hoping to get out of this class is what I'm saying. Don't say I want to be a millionaire, because be realistic here. All right. I have a general idea now. Okay. Let's get started. So our next class is Wednesday. All right, I'm gonna have slides for every single time. Well, yeah. Let me show you guys something first. So this is what when you do, okay? Whoever doesn't have this already, when you do have this app, I mean this platform, this is what your chart is gonna look like. Okay, when you first download it, it's not gonna look like this because I have everything that I use added onto this. All right, so I just want to kind of share this with you first. This is Thinkorswim by TD Ameritrade. If you don't have this, make sure you get it. It's really fucking good. In terms of trading wise, it's not complicated. There are other better platforms. Let me tell you this, but this isn't complicated to use, and you're gonna see if you haven't used it already. It's very, especially because I trade right on my phone now. I trade on my phone, so it makes it easier for me to trade on my phone because when I'm trading, I'm looking at charts and then I'm trying to enter and exit trades, blah 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 blah. If I'm using another software, I would have to exit my tab, this and that. Do you guys understand where I'm coming from? Like when you're trading, right? You want to kind of be fast with things, especially when you're day trading, especially if you're scalping, and that's we'll get to that later on. But you want to be able to go from A to B as fast as possible, as fast and as easily as possible, right? I'm gonna go here to my whiteboard. Can you guys see my whiteboard? Let me know. Hold on, I'm looking for something. Okay, so in terms of, where is my whiteboard? Gosh. Okay, so just to break down the platforms that I use first, right? So for my day trades, I use Thinkorswim by TD Ameritrade. That's for day trading. All right, and just you don't have to do what I'm doing. Okay, I just like the way I am, kind of putting my money, like everything I'm putting my money in, I kind of like how I'm doing it right now. But you don't have to do the same thing because it can get confusing. For my long-term portfolio, I use E-Trade. Does anyone ever use E-Trade? So E-Trade is actually like one of the oldest brokerages that was made, right? And it has like a really good history of like customer service. And that's especially with my long-term account. Like for example, I want to ask you guys this. What, in your opinion, if you're going to have multiple accounts, one being your, one being your long-term account and one being your day trading account, which one do you think you would want to have more in? Long term, obviously. Long term, okay? Not day trade, long term. Because long term, you're not, because look, guys, when you're day trading, just remember this, right? When you're day trading, you're trying to make gains every day, right? So your account is gonna fluctuate for the most part, right? When it's long-term investing, you have a lot more in there and you're not going to have that much fluctuation unless you're going through what the market's doing right now. Then it'll fluctuate. But for the most part, I like E-Trade better for long term because I trust this platform more than I do TD Ameritrade. That's just me, right? I have a lot more money in E-Trade than I do in TD Ameritrade. Now, I'm sorry. Yeah, E-Trade. Now, has anyone ever used Fidelity? So I have another account with Fidelity. Okay. Fidelity is also a brokerage account that's kind of like, old school. And a lot of old people actually use this. I like the way Fidelity looks because if you actually go on like the website of it, I feel like I can see a lot more of like my performance and stuff. Um, in terms of how much I've made the past 3 months, how much I made the past year, and it actually also tells me, my allocation in terms of like all of the stocks that I'm in. So it'll tell me if I'm being aggressive or if I'm not being aggressive, this and that, right? So at this point, it's up to you if you want to play around with these brokerages. Does anyone know why I'm not even mentioning like Robinhood right now? Look, look, I know I have nothing against Robinhood. It's just you have your money somewhere, okay? And I don't know if any of you have actually run across this problem where you something happened and now you're asking questions, right? You're asking questions, and unlike Fidelity or E-Trade or TD Ameritrade, if you try to call them, you can't. Can you call them? No, you can't even call them, right? You email them and they email you back. So if you have a lot of money in there, it's gonna be it gets stressful. So it happened to me one time. I was trading. I was trying to sell my option. I was supposed to make like 6,000, and I only ended up making like $200. And they didn't get back to me for 3 days. Okay, so after that, I was like, you know what? No, right? If I have a smaller account, right? If I'm new or if I have a smaller account, then Robinhood, you know, is tolerable. Why is Robinhood tolerable if you have a smaller account and if you're new? Because it's literally Robinhood makes everything so much simpler for you, right? If you're 12 years old, you can use Robinhood and understand how everything works because they literally spell everything out for you. But to me, it's not a good, it's not a good platform because I prefer customer service over, you know, how attractive the platform is. Okay. That's just me. You guys don't have to switch. I don't really care. I know a lot of people who use Robinhood, but it's just based on my experience. All right. So if you don't have Thinkorswim, make sure you guys add it in there. There's also another one called TradeStation. I don't know if anyone has used that before. TradeStation is good too. Okay, so we'll just kind of go over this quick stocks. So there are actually two different types of stocks, right? Does anyone know what the two different types of stocks are? Webull. I don't really mess around with Webull right now because they're kind of new. So I don't, it's up to you guys. The ones I listed are the ones I use. So there are what? There are common stock, and there are preferred stock. Okay. So common stock represents ownership. Okay. If someone says they own a stock, they usually mean that they own a common stock, right? If you own a few shares of a company, it usually means you own common stock, right? Then you have preferred. Anyone know what preferred is? So preferred, it's like a debt instrument. Okay. When you purchase a preferred stock, you got to think of it as like you are loaning the company money. So when you're loaning something, you're expecting to be paid back with what? If you loan something, interest, right? Simple. Sectors. By the way, if you haven't caught on by now, I like to kind of do things like fast so I kind of get everything across. I'm not gonna like talk to you slowly. I don't want to waste your time. So if you think I'm moving too fast, tell me. Okay. But you should understand, you're gonna be able to understand everything I'm saying regardless. So sectors, right? So the general, right? General economy and the stock market is organized into two tiers, right? Anyone know what the tiers are? Sectors and what? Industries, right? You can look at them as sectors and industries. Okay. So right now, there are how many sectors in the stock market? 11. 11 sectors, right? So a sector is basically when sectors, it's when basically it's like a broad grouping of companies, right? It's a grouping of companies. And they all have similar economic characteristics. There are currently 11 of them, right? And this is how I kind of determine what sector I should buy into. Okay? Does anyone know, can anyone list some sectors that you can think of on top of your head? There you go. Those are the sectors, okay? And I'm gonna list them all after this, after I explain what industries are. Okay, so and then there are industries. These are called subcategories, right? So this allows a closer grouping of similar businesses. Okay, so for example, Dollar Tree and what was that company? Tiffany. So when you compare Dollar Tree and Tiffany and Co., right? When you compare these two companies together, are they different companies? Yes, right? Yes or no? They're different, right? But so they're in different industries, right? Different industries, same sector. What is the sector called? Consumer discretionary. Does that make sense? Is that simple? Okay. Let's list some financials. That's the sector. Okay. So this sector consists of banks, investment funds, insurance companies, real estate firms, etc. The revenue from this sector comes from, anyone know? Mortgages and what? how do banks make money from us? Loans, right? And they gain value from what? Interest rates. Okay. So the reason why you should know the breakdown of these sectors is so that, for example, right? For example, let's say we're getting closer into like the holiday season. Wouldn't you want to kind of trade consumer discretionary sectors over energy, for example? Yes, right? If we're getting closer into the holidays, you need to know these sectors so that you can understand, okay, these stocks belong in these sectors, right? So examples of stocks that belong in the financial sector is Goldman Sachs, right? JP Morgan, AIG, for example, Bank of America, Wells Fargo, things like that, right? That's financials, right? Then you have utilities, right? The utility sector right now is kind of I think we might kind of see a shift into the utility sector, and I'm gonna show you the stock that you guys might have seen already. So, utility sector consists of electric, gas, water companies. Electric, gas, water. What else? Integrated providers. So the way this sector makes money, the way these companies make money is by recurring income from charging consumers and businesses that provide higher than average dividend yields. Now, utility companies like have you guys heard of NEE by now? Next Era Energy, right? We traded that today. Um, that's a stock that's in the utility sector that kind of went pretty nuts today. Then we have consumer discretionary, what we went over earlier. These are retailers, media companies, consumer service providers, apparel companies, things of that nature. They benefit from what? Anyone know what they benefit from? Right. Yeah, of course they benefit from consumers, but so basically the answer I'm looking for is they benefit from an improving economy. When consumer spending blank accelerates. Okay? That's when they benefit from. So, for example, why, you know, why did Amazon, okay? If you guys didn't know this, the whole time during the pandemic, why Amazon literally just went up, didn't even go down, barely even went down. Why was it during the pandemic Boeing lost half of its valuation when Amazon got richer, right? Just food for thought so you kind of have a better understanding next time, right? So, but did any of you think about this at the time or no? Right? You guys, we're all answering this now, but I'm pretty sure for the most part, even me, like I wasn't even thinking about this like that. I was like, oh, duh. Now I know. So stocks like, Amazon, Nike, Starbucks, things like that. Then you have consumer. Are you guys writing these down, by the way? Just asking. You don't have to. It's recorded, so consumer staples, food and beverage, as well as companies that create products that consumers are not willing to cut from their budgets. Now, when I say that these are stocks that are companies that people are not willing to cut from their budgets, I spelled budgets wrong. What do you guys think these stocks are? Where do you go every single, every week, wherever, to buy groceries? Costco, Target, Walmart. So these are considered defensive plays, right? These are considered defensive plays. And oh, hold on, someone got disconnected. You just rejoin the link. What was I? Okay, defensive plays. Shit, I just lost my train of thought. Okay, yeah, defensive plays are usually right when I have these stocks, right? I can trust that they're not going to be easily affected by economic downturns because regardless of what happens to the economy, people will still buy the products. Okay, so if you have a long-term portfolio, right? And this is just a tip: if you have a long-term portfolio, would you want a lot of defensive plays in there to kind of protect you from the downside? Yes. Right. And that's what I have. That's what kind of protected me the most. Okay. Because when I turned, I had my long-term account went up like almost over 100 and something, over 150% in like 4 months. Right now, just on top of that, do you guys know the average return on the S&P 500, by the way? The average return on the S&P 500 is like 10 to 12% yearly. Okay, if you're up 160% in 4 months, you did what the S&P does usually. How long would it take the S&P to do what you just did in 4 months? Food for thought. Okay. So people get caught up in profits. I got caught up in my profits. I was like, fuck, I want more. But I wasn't really looking at the bigger picture. Like, dude, right? I was so ahead, right? So this ties into with like your day trading, right? Because what's gonna happen is you're gonna see, because sometimes I'm pretty sure you guys have seen profits before where people literally will be up like 130% in one day sometimes. You guys seen that? They make this money and they're up 130% in one day. And then next thing you know, next week, right? Next week, it's down freaking 10%. So, what did they do wrong, for example? Right? In the middle of everything, right? More than likely, right? This is where, behavioral finance comes in, for example, if you're into that kind of stuff. This is where greed comes in. Right? This is where greed comes in. Because when you're investing or day trading, you're not thinking rationally. Right? So make sure, right? Now that I'm saying this, when you guys get, you guys get comfortable trading, just know that the S&P 500 itself, on average, returns like 10 to 12% a year. So if you're up 40% in like a week or 2 weeks, you don't really need to compare yourself to someone else that's making, these big gains, because sometimes they won't be able to handle that. Okay, back to the sectors. Energy. So energy, oil and gas exploration and production companies, integrated power firms, refineries, etc. So these companies generate revenue that's tied to the price of crude oil, natural gas, and other commodities. stocks like WMB, DVN, HES. These are just some examples. Okay. Healthcare, biotech companies, hospital management firms, medical device manufacturers. So when you're looking at the health sector, right, you can look at this sector and consider it as a growth opportunity and a defensive play. Can anyone answer why this can be looked at as both a growth opportunity and a defensive play? Because the health sector is always going to grow. People are always going to require medical aid. Okay? People are always going to be, you're always going to be required medical aid. So it's not going to really matter. Right? But sometimes a lot of these healthcare stocks are already so expensive that sometimes I don't even want to get into it, because some of these stocks will be like $400, $500. And if I'm going to be adding it to my portfolio, you know what I mean? That makes sense, guys? Industrials. I like industrial stocks, by the way. Aerospace, defense, machinery, construction, fabrication, manufacturing. Do you guys can you guys give me a list of some names from the industrials sector? No. Cat. Okay, cat is one, limit is one, HON is one, space can be one too, because it's aerospace. You know what I mean? I think let me see. Boeing. Yeah, Boeing is one. I think yeah, Boeing is definitely industrials. Because airlines is an industry. Yeah, airlines is an industry. So Boeing, uh car manufacturers are industrials too, I'm pretty sure. There are like literally dozens of industries. So it can get confusing sometimes. Let's go through the rest. Telecom's kind of boring. Telecom, wireless providers. No one really buys Verizon anymore. Fence. So you have, T-Mobile, Verizon, Sprint. I don't even know if Sprint has a stock. Materials, mining, refining, chemical, forestry, and they discover raw materials. So Vail, BHP are good examples of material stocks. Okay. We don't really pay attention to material stocks anyways. I just wanted to make sure you guys know all of the sectors that's in the market. Real estate, right? Obviously, these are companies invested in residential, industrial, and retail real estate. So yeah, rent income, real estate capital, appreciation. So the real estate sector is sensitive to interest rate changes. Okay. Now, let me get into the futures market real quick. Just giving you guys a small intro to the market today. Futures markets. So, futures market, and I'm pretty sure 90% of you, 99%, 98% of you won't be trading futures because I don't. But just so you know what this is. So, it's when you buy and sell commodity. That's basically what it is. Okay. Basically what happens is you buy and sell commodities on contract on what's called future contracts for delivery on a specified future date. Okay. Anyone here trade futures? So you can, buy and sell and hedge financial products and the future values of interest rates, right? So when you're looking at futures, it's like this. You want to get good at basketball, but you also want to get good at soccer. So you can't really get really good at both of them at one time, right? So if you want to jump into futures, you know, right now, then you should focus on futures instead of options, is what I'm saying. Okay. Let me see. Let's go over options itself. That's where it gets fun. Okay. Options. You want to know the definition of options? Difference between options and stocks. So stocks, you own. Options, you have the what? You have the right, but not the obligation to own. Essentially, you're just what? You're kind of like borrowing, sort of, right? So let me. I'm gonna. Don't worry. I'm gonna explain it to you guys, right? So the difference is if you own five. Okay, let's say Facebook is trading at $100. You own 5 shares. How much did you spend? You spent 500. Okay. Now, if Facebook goes up $1, you're up what? How much did you just make? You just made $5. If it goes up $2, you just made $10. If it goes up $3, you just made $15. Boom. That's you buying shares and owning it, right? You own this forever until you sell. Okay, so that's shares. Now, with options, here's how it works. Let me make another. Okay, let me use two people as an example. Let's do Mitch and Mike. Okay, so Mike owns a house. Okay, the house value is let's say his house is worth right now $100,000. Okay. Mitch is what's that word called? Basically, Mitch wants a house. Okay, Mitch wants a house in the market. There you go. Mitch is in the market for a house. Is in the market for a home, for a new home. Now he's looking around. He's looking around. He sees Mike's house, right? So Mike has his house on sale for $100,000. Mitch doesn't have $100,000 right now, right? He can get the money, but he doesn't have it right now. But Mitch wants to close the deal right now. So what he tells Mike is, Mike, I'm going to pay you. I want to say $5,000, right? You have to sell me your house for $100,000. Okay. Now, what does Mitch think deep inside about the house? Exactly. Mitch thinks that Mike's house is going to appreciate in value. Okay. Now, Mike says, let me guess what Mike says. Mike's like, okay. So he gets $5,000, right? But what Mitch tells him is, hey, Mike, give me 1 month to get the money. I'll get it to you. But you have to sell me the house for $100,000. No matter what happens, right? They're signing a contract at this point, right? Now, let's say, you guys good if I delete this? Cool. Now, Mitch comes back in 3 weeks. 3 weeks later, he comes up with the 100 grand, essentially, right? Whatever, it comes with the 100 grand. But the house is now, no, let's say the house is now worth, somehow $150,000. How much is Mitch buying the house for? 100K. Why? Because Mike took the 5K to lock it in. That's essentially how options work. Okay? Essentially, that's how it works. So let's say you have, Facebook. Right? You have Facebook is trading at $100. Now, I don't want to confuse you guys here, but this is where, you need to pay attention. Facebook is at $100, and what you're going to see when you're trading options, right? And we're gonna go over this in the next class too. We're gonna go over like in depth. But what you're gonna see is you're gonna see strikes, right? So it's gonna say, oh, okay, Facebook 95 call, $95 strike. Facebook $100 strike. Facebook $105 strike. Facebook $110 strike. What are these strike prices? What do they mean? Essentially, what do these strike prices mean? So remember, with options, you have the right, but not the obligation. So essentially, exactly what Sydney says, right? That's gonna be the agreed upon price. So essentially, what you're saying is, if you buy this contract right here, that means if you were to exercise that option, what are you gonna be doing? You're gonna be buying Facebook for how much? For $110 per share. But I mean, are you gonna really fucking do that? No, right? You're not gonna do that. That's like the dumbest thing ever, right? You're not gonna do that. This one, you're gonna be buying Facebook for 105 per share. This is me breaking down options, okay? This, you're gonna be buying Facebook for $100 per share. And this, You're gonna be buying Facebook for $95 per share. Which one makes the most sense, to be honest, if you were to exercise your option? 95, right? 95. Now, this is going to be the most expensive one, the most expensive option. This is going to be, kind of a less expensive one. It's going to get cheaper. Now, what is the difference between these four? Other than the fact that you're buying this one for $110 per share. Because I'm only showing this if you exercise it. And I'm not showing you guys the expiration date yet. So this one is considered out of the money, this 110. This 110 and this 105 is considered out of the money. This 100 is considered at the money. When by the money means it's how close it is to the actual price of the stock. So this is 95, so this is considered in the money, right? In the money has more intrinsic value, and that's what we're going to go over on Wednesday. In the money has more intrinsic value. And what about out of the money? What do you guys think you will make more money on? The one that's out of the money or the one that's in the money? Now, it depends. It can be in the money, but it depends. For example, let's say you choose, let's say you choose a Facebook 110 and then next thing you know, it just jumps to 110 right away, right? That's where all of the Greeks within the stocks come in, right? That's where you have delta, theta, gamma, rho. And that's what we're going to go over on Wednesday. But what I want to talk about right now is, so Facebook's at $100, 95, 100, 105, 110. Now, there is also, right, an expiration date. Right, there's also an expiration date. Now, if today is Monday, okay, if today is Monday, you guys know how often the expiration dates are on these names, on these options? Do all stocks have only weekly expirations? What about SPY? SPY is an ETF, right? SPY is an ETF. And if you don't know what that is, we'll also go over that Wednesday. But SPY, for example, has an expiration literally every 3 days, okay? But what I want to tell you is when you're day trading stocks, okay, you always want to choose, I always choose the nearest expiration. Why is that? Because I'm day trading, right? No, it's not 2 days. It depends if I'm trading SPY, then yes, I might choose Wednesdays. But in this case, I'm gonna be choosing what day? Friday, the nearest Friday, right? Because when you're day trading, you're buying and you're selling the same day. That's what you're doing. You're buying and you're selling the stock, the option the same day, right? You don't need to buy expirations that are long, like more like next week or 2 weeks. No, because if you're gonna sell it the same day, you're just wasting your capital at that point, right? Because when you're essentially when you're trading options and you're buying, right? You're buying calls. I hope you guys know the difference between calls and puts. I didn't go over that, but kind of very basic. So calls, right? You guys know what that is, right? Calls and puts. Calls, you think the stock's gonna go up. Puts, you think the stock's gonna go down. Now, if you're buying calls, you want the stock price to go up, right? If the stock price goes up from 100 to 104, right? Just to back up a little, which one of these would you choose if you had to trade this right now? I would choose the 100 because the 100 is going to be cheaper than the 95. But if I choose the 105, Facebook might not move that much, and it depends. And it all depends on what time of day it is, and that's, we're gonna go over all that. It depends on what time of day it is. It depends on where the chart is at, in my opinion, or where the overall market is. That all kind of factors into which strike that I want to choose, because I want to make the most money at the end of the day, right? For example, this first one can cost you like $500. The second one can cost this one can cost you, let's say 350, and this 105 can cost you 275, and this one can cost you 150. Right? Now, every single one of these contracts have different Greeks within them. Right? They have different deltas, they have different thetas, they have different gammas, right? It's different. Okay? They have different vega. For me personally, and like I said, we're gonna go over all of this on Wednesday. I don't really pay attention to the Greeks unless, right? There's an unless coming. Unless I'm gonna be swinging the stock overnight, right? Unless I'm gonna be swinging the stock overnight, then I don't really need to know how much I'm gonna make per dollar move, because that's what these Greeks tell you, right? For example, just like just to explain the delta and theta, and then we'll explain gamma vega on Monday. Delta is how much your what? Anyone know what the delta is? This is how much your contract will go up in value per dollar move. And theta is what? How much your contract will lose in value every single day you hold the stock, the option. Now, I'm pretty sure this has happened to someone. You buy a, let's say you buy a, let's say you buy a, let's say you buy a contract Monday and it expires Friday. You're holding, and you're brand new, right? You're brand new. I'm trading options. Look at me, right? Next thing you know, Thursday comes. You were up, Tuesday, Wednesday, Thursday comes, stock goes down a little bit. Now you're down 50%. Friday comes, you're down 89%. But the difference is, the crazy thing is, the stock didn't move from Thursday to Friday. It stayed in the same price, but as Friday came, your contract lost all of its value. What happened to your contract? It's going to expire what? It's going to expire worthless, right? That's what you don't want to do. And that is why sometimes choosing out of the money can be dangerous. Does that make sense? Because if Facebook's at 100 and by the time Friday comes, it's not around 105, then your contract's going to expire worthless, because you can't exercise the stock at 105 if it's not at 105 yet. But if you bought a 95, then you'd be fine. Does that make sense on why you would pay more for an in the money option than you pay for an out of the money option? Okay. What I want to do now is, so Friday, Wednesday, we're gonna have an hour 30 to 2 hour class. Friday's definitely gonna be like a 2 hour class. Sunday, did I put Sunday on there? So what I want to do this week is essentially I want to be done covering options and Greeks by Wednesday or Friday. Okay. But was I okay today with kind of like explaining everything? Was I going too fast for you guys? Because this is like nothing compared to what needs to be like gone over. I'm gonna try to post this recording by tonight, but I have to go to the airport at like 9. Yeah, and this is gonna be on YouTube unlisted. The links are only gonna be shared for everyone here. All right, guys. By the way, I had like 3 people ask me today about the trading group. If you're not in it, since you guys are in this class, just, send me DM if you want like a little lifetime discount to the group. If you want, doesn't matter to me. It's gonna be available on YouTube by tonight, hopefully. You guys have a good rest of your night. I'm going to send you guys. So next time on Wednesday, I'm gonna send you the link like 30 minutes prior, so so I don't have to keep people like letting people in every 10 minutes. You guys have a good rest of your night.